So generally, historically, these parabolic moves, they'll unfold, at least in silver, in two parts, two stages. I think we had the first stage when silver basically broke out from $50. It very quickly, in about 2.5 months, went to 120. So, a 100% plus move. And if you look at a long-term chart, that's clearly a parabolic move. And then we've had the correction. I think the correction's over. The entire sector, gold, silver, mining stocks, they're all back to making higher lows and higher highs. And the mining stocks in particular are a whisker away from making new all-time highs. So I'm pretty sure that mid-stage correction is done. And now we're probably just starting the second part of this parabolic phase. And it's not unusual. I mean, in silver, the first phase did more than 100%. It's not unusual for the second phase to do, as much, and I think it'll probably do more. So I've been on record that $100 silver would be a piece of cake. Well, obviously I was too conservative on that call. I think $250 is probably going to be a piece of cake, and $500 is possible, I think. So if we just do the same thing during the second part of this parabolic phase, if silver just does 100% from a breakout of 120, well, you're right at $250. And that should be very easy to do during the second phase. I think we should be much bigger move. So I think it's possible that we could do 200% during that second move. And they tend to happen pretty quick, just like the first one. I mean, 2.5 months to over 100%. 3 to 6 months, we could go to $300 or even $500, I think. So I think we're very late in a very mature bull market. But I will say that I am open to the possibility that there could be a third phase to this bull market. So we get a top to this parabolic phase. You get the bubble, so to speak, pops. You get the big correction, and then I think there might be a third phase that makes even higher highs rather than another 15 or 20-year bear market. Well, during the last part of a parabolic move, I would expect at least 100%. So we're basically got to 5,600. Let's round it up and say 6,000. I think gold's probably going to do at least 100% during this last part of the quote unquote bubble phase. So something between 10,000 and 12,000 sounds reasonable to me. People make the mistake that, I've heard this before, is like, I don't want to live in a world of gold 10,000. Well, you could have said in 2000, exactly. I don't want to live in a world of gold 5,600. Gold is at $250. Well, the world's not ending, as far as I can tell. Bubbles aren't driven by fundamentals. They're driven by sentiment. People have seen price go up for a long time, and you get to a point where everybody sees their neighbor getting rich, and they want to get rich, so they all pile in. So it's not a matter of that the fundamentals are collapsing and the world is ending. It's just greed has taken over in a market, and everybody is buying because they all want to get rich. They all think they've found the sure thing. So I don't think $12,000 gold means the world's ending. I think it's just a sign that people have noticed that you're making a lot of money in the precious metals, and their neighbor's getting rich, and they want to get rich. Over the last 2 months, I think we've seen the first part of that mania phase. This is the part where silver is joining the party. That's what silver does. It comes on late in the cycle, whether it be an intermediate cycle or a long-term secular bull market. This is the point where gold and miners maybe are starting to get a little expensive, and traders can look over here like, well, gold is almost $6,000, but hey, silver's $50. So I'm going to take some of that money, instead of putting it into gold, I'll buy silver. Yeah. And so silver being a thin market, it doesn't take much capital, much liquidity into that market to really send it into the stratosphere. So I think we saw the first part. The second part, I think, is coming, and it won't be long before it starts in earnest.
These markets are extremely volatile, and today's news, seeing gold have a huge pop, we're seeing oil have a pop. I mean, we're seeing even currencies. Like if we take a look at the dollar, this is what's really interesting with the scenario that we're in right now, is we have this huge 1% rally in the dollar today.
Yeah, I was going to ask you about
and
that.
gold is actually moving higher.
Yeah.
And usually we see the opposite, but we're in this unique scenario. And this clearly tells us that when the stock market crashes and there is global fear, the dollar tends to do well. And so we are seeing the dollar move up substantially. But because it's like a kind of also a war scenario here, gold is also broken this relationship and gold is moving up with the dollar. And so the big move up in the dollar today is telling us that overall, I think the stock market is very scared. The momentum has shifted from an uptrend to now it's kind of neutral, which is why we're not involved. We want to be either in an uptrend or take advantage of falling pricing. We don't want to be stuck in a sideways market. And so the dollar's got this huge move up in telling us that there is some global fear and that we need to be aware that there could be a huge leg down coming for equities. And the big question will always be, if we get a move down in equities here, is money going to flow out of stocks and into precious metals? And that's what we saw in 2008 temporarily. And so we just need to see if that is going to happen over the next couple of weeks or not. Until the stock market picks a clear direction, the markets are really just kind of noisy and dangerous and choppy to be involved in. Take a look at gold. If we look at gold's chart, it's had a series of moves that are kind of been repeating themselves. We have a rally up and then it consolidates for a while. We have another big rally. It consolidates for a while. We've had this over and over, and usually each time it's around a 20% move. And we've just had another one. And so the big question is, how is gold going to react? A lot of times it takes several months to work through. Usually price comes up and tests near the highs a few times, and then eventually it has a breakout. And so we're kind of back up testing these highs, and we're starting to see, I feel like it's a little exhausted and gold may pull back and it might build a launch pad to start to break through again. And if it does show signs of a breakout, then it could be very good trade because the next move for gold based on Fibonacci is telling us around 6,100. So there's some pretty good upside for gold still. But there was a lot of damage done to this chart. And when we look at the chart of gold, this big red bar is something to be worried of. This is a very bearish kind of chart pattern. The body of this red bar, we have all of these bars inside acting as inside bars. This is a bearish price action, and it can mean that once you reach and breach that level, you can have a very big red bar that brings it right back down. And we saw this in silver back in 2011, actually. If we look at the silver chart down at the bottom, we had this huge red bar. And then you have all these inside bars. It works itself back up and then it breaks and resolves to the downside. So that's like a visual of kind of how that can play out. And so that's kind of what we're trying to figure out with gold. It's either it needs to put in more time and build more of a launch pad and prove that it's not just going to get rejected here. But I do like gold. If gold builds a nice launch pad and takes some time to recover, hopefully we don't have like more war stuff that just creates it to pop and take off. Because I feel like getting up into this range at any point, I think we could actually see another big bout of selling. And if for some reason something in the Middle East seems to kind of get somewhat resolved or bombs stop getting dropped and things like that, we could very quickly just naturally see the fear dissipate and gold pull back very quickly. So I think gold has quite a bit of risk up at resistance. And because we just had peak news and we're at peak price, I think there's more potential for it to pull back at this point. But over time, I do still like gold if it can build a bull flag and then eventually have a nice breakout. We are seeing selling with silver today. We saw a lot of fear in the markets early on, and silver was trading higher, but it's quickly gotten sold into. So I'm not a big fan of silver at this point. I definitely prefer gold because it's more stable, but it also has a much stronger price pattern. And investors go to gold when there's actually, some real fear going on in terms of war and things like that. And that's the scenario we're in. So silver, I think, could sell off and pull back very sharply. I would temporarily still avoid silver. It might be a very good play when gold builds a launch pad. We'll take a look at silver. We'll see how it looks. And it could be a very good play. I think silver has potential to pop to about 140. That would be the next upside target based on technical patterns. So there is potential, but I definitely want to wait for silver to prove that it's built a base, that it is starting to go up, and then I'll jump on that trend.